I'm Diane Resignola with Nareit. I'm here today with John Worth, Executive Vice President of Research and Investor Outreach at Nareit. John, how are you today?
I'm good. Thanks for having me, Diane.
Since the pandemic began, your team has been conducting monthly surveys with Nareit members about their rent collections. What was the impetus behind starting these rent surveys?
This is an unprecedented time, obviously, for society, the economy, and the real estate that houses the economy. And we know that real estate is a durable investment that often performs well in economic downturns. But ultimately, we know the financial health of the landlord is going to reflect the financial health of the tenants. So REITs, owning between 10 and 20% of the commercial real estate in the United States, provide a perfect sample for gauging the rent-paying ability of tenants across the U.S. And we think this has benefits for the REITs themselves, for commercial real estate operators more generally, investors, and for policymakers.
What are some of the key headlines coming out of the June rent survey?
I think there's two headlines. One is improvement, really market improvement in retail. We saw freestanding retail, which had been running at about 70% of rents paid, jump to 79%. So that's a 9 percentage point increase in rents paid. And we saw shopping centers, which had been running with just below half of rents paid, jump to just over 60% of rents paid, an 11 percentage point increase from May. So we think that's really the headline representing the reopening of retail across the country. In the other sectors, we saw really continued strong performance. We've got industrial running in the high 90s, which is a continuation of what we saw in April and May. We've got apartments, which had been running in the above 90% to up to 95%, jumping up to 97.5% of rents paid. So again, a nice improvement in apartments, and office with about 95% of rents paid, holding up nicely, which is a continuation of what we saw in April and May. And then healthcare, which had been running in the high 80s, jumped up to 95% rents paid. So broad-based improvement, which we think is a really positive sign.
What's next for REITs in July and beyond?
I think we've got a lot of question marks. One of the positives we take from this is that we know that as the economy has started to reopen, we've seen consumers have really responded. We've seen foot traffic in retail locations really jump when reopening starts. And of course, we saw consumer spending jump dramatically. And it's good to see that has extended into improved rent payments. I think the question marks for commercial real estate are really going to be the same question marks we have for the broader economy, which is how durable is the reopening going to be? Already we're seeing states requiring slowdowns in their reopening process. We may see some reversals. So really the question is going to be how durable the recovery is. I would say the one thing that gives us some comfort is that we know that coming into this crisis, REITs were really in a position in terms of the strength of their balance sheets, their strong operating performance, and their access to credit and equity markets to really be quite resilient in this crisis. And we haven't seen anything that makes us think twice about that.
John, thank you so much for your time today.
Thanks for having me, Diane.
For more from Nareit, visit REIT.com.